Welcome everyone. Today's clinic was by request. It was a live session request, and I've entitled it Reading Pullback Delta and More, and I'm doing this with a Sierra chart focus. What this really is it's a bit of a recap of the Delta Deep Dive clinic. And of course, we've got a recording of that clinic in the library, but I can appreciate, there's value to delivering this stuff in real time and doing the Q&A. So we'll focus really on 2 or 3 of the concepts within there, but we'll make it a bit more interactive and we can dive into questions and this kind of thing if we need to. I've got Sierra chart open here, so we can do a few examples as well and explore some of the concepts. So let's go. Normal thing, trading is dangerous. I highly recommend you don't do it if you're of a nervous disposition. So the agenda by request. The specific request was to look at sort of delta high, delta low, high delta, low delta, and look at pullback delta. And then I'm going to expand on this as well and revisit some examples of what we can do when we put some of this understanding together. Also based around the delta that we can interpret within various order flow patterns. I've put the original topics here from the Delta Deep Dive clinic. So we covered delta high-low when we were talking about per bar delta metrics and how to use them. But let's dive straight in. So high and low delta and how to interpret this. We can really summarize this as delta strength. Now, what I've got here on the left is, this is range charts, period, etc., doesn't matter. And then we've got tabular data down here showing the bar delta. So what have we got? 598, 362, 314. And then we've got below it, we've got the maximum and the minimum delta that occurred during the formation of these bars. So it corresponds to, let's move this thing out of the way, it corresponds to these candlesticks. Here, the maximum delta was 602, closing delta was 598, lowest delta was -26. It's a candlestick. So same thing here, this closed its high, not surprising, we're looking at range bars. This one showed a bit more movement. The maximum delta was +108. There's the wick of the delta. The minimum delta was -53 and it closed -46. So let's look at this in a chart format. Let's change that to candlesticks. Here we go. So what I've got here is a candlestick chart. It's ES, it's 5 minutes, doesn't really matter. So candlesticks of price, candlesticks of delta, which in the Sierra chart world is called ask bid volume difference bars. When I started off reading delta, I always used to find the candlestick representation a bit distracting actually, and I preferred just to see the closing prices. I wanted to see a histogram. But if we ignore the wicks, we're losing the story. And the key to interpreting this, it's really what I've put here, is read the candlesticks. And we all understand how to read candlesticks of price. If we look at, I don't know, let's look at this candle here, yeah? So we know it's an up candle, it opened, it wiggled down by what, probably a tick, it went up and it came off the highs to close here. You can interpret that wick as probably seeing, oh, there was some selling pressure or something like that. Similar story in the delta. So the buying power, the aggression, opened, went lower, it went to a maximum, and it closed off its maximum. It sort of supports the story of price, which is a good thing. Now, we can interpret delta candlesticks in the same way we interpret price. If we've got a candlestick, let's look at this one. A candlestick that closes at its extreme has the implication it's pretty strong and we could expect some continuation. The same thing applies when we're looking at delta candlesticks. Here's a big green delta candlestick. It opened, the delta closed at its high. And let's just see where that lines up to. It's this one. So, it's correspondingly strong candle. Where it gets interesting is if we have got something like this, where we do see positive delta, but the delta closes off its maximum. So it tells us things were pushed back. So we can interpret the strength of the delta by thinking about where is the closing delta relative to its high or low peak. I have an indicator which I call delta strength, and very simply it will mark when delta closes within X%, say 0.5%, 1% of the maximum minimum value. In other words, do we have a candle that closes near its high or low? And I created that really just to avoid the distraction of reading this and looking at the wicks, because normally if I'm looking at bar delta, I'm looking more at divergences. So here, for example, on the way down, I'm looking, is the delta rising up? So here, okay, we've got a bit of a delta divergence going on, more selling, price is moving down, but actually selling pressure is decreasing. Selling pressure is decreasing, less supply as price is going down, it's horizontal exhaustion until such point as things change, and it changes in this candle here, which has the big positive delta. And actually, in seeing that, I can just see that this positive, strong delta candlestick, yes, it coincides with this one. Here's an interesting one. We had a push down, but there wasn't much conviction. The delta ended up neutral. Not surprising. After a big move, we consolidate for a little bit. We get into ebb and flow. So what I'd contend is to understand high and low delta, there are two things you really need to do. One is consider the relationship of the closing delta to the high or low within the period of the bar it relates to. There was an interesting one back here which I saw. Where are we? So, anything here where we transition from positive to negative delta, that tells you a story as well. So think about where have we closed in relationship to the extreme? That's a sign of strength in one direction or another. But then also think about what's the story in the formation of this delta candlestick. You understand totally how to read this for price. Delta's no different. So read the formation, the story of the formation of the delta, then compare that to the story of price, and do they match each other? If they match, things are logical. If they don't match, then it's a sign for sure that something is likely to change, and the volume will give you the leading clue of what is likely to change. So that's my take on high and low delta. Does this make sense in terms of explaining the concepts and, for those that request this session, clarify the significance? Okay, we've got an immediate yes, which is great. Are there any questions on the extreme highs and lows of delta from anybody else? Well, I've got this nice simple chart up and we can explore them interactively. Okay, it doesn't look that way. So what I will do is carry on to the next topic. So yeah, takeaway, read the candlesticks. You know how to do it with price. Delta is no different. Okay, now we're going to go to pullback, and I show this chart a lot. Before we explain pullback delta, let's recap on the idea of what the pullback is. And actually, I might do this in Sierra chart to bring it to life a bit more. So here's a chart book, 30-minute footprint of ES. I've got a dome here, just happen to be playing with what screen layout is going to be good for ongoing clinics, where we can look at the dome and also look at footprints. So what I've configured here in Sierra chart is known as the pullback column. I'm using my regular favored 2-column footprint, where I've got bid ask in the column 2, and I've got delta, horizontal delta, 31 minus 0 is 31, 26 minus 8 is 18, 8 minus 46 is negative 38, etc. in the left-hand column. So I've got all the raw data I need to be able to interpret what's going on, both in terms of diagonal bid-ask aggression, it's highlighted, but I can see at every price level what was the net buying or selling at each price level, and then where we're trading in relation to that tells me whether the aggressors, the market orders won, or the limit orders won. I also highlight the highest positive delta, and I highlight that in red, because if I'm below that, that tells me I've got passive supply, and I highlight the largest negative delta in green, because if I'm above that, then there's passive demand. So for as long as I'm trading within this area, we're in a logical range where the limit orders are in control. And what you can see on what are relatively long time frame candles is that most of these rotations, the 30-minute rotations, have got positive delta, which I indicate as supply, above strong negative delta. Now here, we closed below it, here we closed above it, so actually this tells us the range of the battle, but we closed below it, so actually overall, selling won, both from the passives and from the aggressors, 349, hitting the bid, and they carried on pushing price down. So I like this raw data format because it gives me everything I need to be able to see at a glance what's going on within the supply and demand. So that's, my footprint configuration. But what I've got here, and it's bounded by this dashed orange line, is what's called the pullback column. Now, this is set up within Sierra chart in the numbers bars as another column. So my column 1 text is ask bid volume difference, delta. It's what's appearing here. My column 2 text is bid volume by ask volume. It's what's appearing here, all very simple. So Sierra chart gives us 3 columns. I'm not using column 3 columns of data that we can have in every footprint. But we also have the pullback column. And the pullback column, if I put something in it, is what appears here. And the settings are just the same as for the other columns. So in column 1 of the pullback, I want to see ask bid volume difference. In column 2, I want to see bid volume, ask volume. And we've got the same background coloring options, text coloring options, etc. Now, in order to capture the data for the pullback column, within chart settings, I have to enable, here we are, it's in advanced settings, historical pullback data. And look how they've hidden this away. It's right in the middle of this dialog box. So the options are don't accumulate this, recess and accumulate every time we make a new high or low, or recess and accumulate if we make a new high or we touch the existing high. So the mechanic for this to appear is this candlestick opened, wiggled down, came up. As it has come back from this high, this 0 by 31 print, the platform has started to create this pullback column. Think of it as another candlestick. It's the rotation downwards inside this candlestick before it completes forming. So we get to the top, we have the same print. On the way down, 8 contracts hit the bid, 11 lifted the offer. So that's different volume to 8 by 26. So what that tells us is on the way up, 26 minus 11, so that's what, 15 contracts lifted the offer on the way up, and actually nothing hit the bid. So on the way up, we would have seen a 0 by 15 print on the way up. How do I know that? Because on the way down, I've got this 8 by 11. So we can only have 8 by 26 in the total candlestick if that 8 has slotted in there and the 11 forms part of this 26. So on the way up, it was 26 minus 11 is 15. So what I'm now seeing is a kind of temporary candlestick representing the rotation back from the high. If we were to come back up and make a new high or touch the high, depending on how I've set this in chart settings, then as we come down again, this will disappear and it paints a new pullback candlestick. So obviously there is delta inside this candlestick. It's another bar, but it's the bar that's inside here. So I like to illustrate this by saying if we've got a 30-minute bar, we can understand that the 30-minute bar is comprised of 6 5-minute bars or 31-minute bars or 4 7.5-minute bars. Doesn't matter, they're all wrong. But the volume that's accumulated within the 30-minute bar is the sum of the volume at each price level of the smaller time frame division bars. So here, the upper print 276 by 775, same thing as the upper print here in this second bar. That was the only time we traded at that highest price level. But look at the print one level down, 361 by 591. On the way up, in the first 5 minutes, we didn't get there. In the second 5 minutes, 361 hit the bid, 548 lifted the offer. So that's where the 361 came from. But during this second 5 minute period, we'd have seen 548 here, not 591. As we've gone up further, come down, rotated up, here we are at this price level again. 43 contracts lifted the offer. 548 plus 43 is 591. So you can understand how the volume inside any given candlestick is the sum of the volume of smaller timeframes, because all of these are arbitrary divisions. And what the pullback shows us is on the way down, and this pullback will have happened, I got this graphic by replaying this candle. Now, at some point on the way down, the first volume on the way down, after this top print, the 276 by 775, was actually 90 contracts hitting the bid. So you can see the print at that time was 271, less than the 361, and 112 lifting the offer. You can see 479 there, yep. 479 plus 112 equals 591, which is ultimately what we get to. So this will have disappeared on the way back up. So that's the mechanic of the pullback column, the pullback candlestick. We are tracking the volume on the rotation away from the extremes of the candle in any time frame. Now in Sierra chart, what we can do is, and this is why we tell the platform to store the historical pullback data. In this table down here, we've got the high pullback delta, ask bid volume difference, and the low pullback delta. I'm also, we can actually display this in a couple of ways. I'm using study price overlay, study subgraph above below bar as text. I'm using this study, which will take a subgraph from another study and paint it above or below a bar to pull in numbers bars calculated values, high pullback ask bid volume difference. And I'm painting that red or green, depending upon whether it's positive or negative. And that's how I'm getting this minus 221 that appears here to also appear at the top here. So now I can see in proximity of each candle what was the result of the pullback from the high and what was the result from the pullback from the low, so I can gauge the aggression. So here, as we pulled back from the high, the net delta is minus 221, more selling than buying. As we pulled back from the low, we had positive delta, 149 contracts. Now, as I get to the third part of this presentation, I'll explain why I'm using this study, or you'll see why I'm using this study rather than what you can do natively. You can actually get this information natively at the top or bottom of the numbers bars using the numbers bars. You don't have to overlay it. And there's a setting, let's just find it. It's, I've lost it. Here we go. Show historical pullback, ask volume, bid volume difference. And that's where you set the colors and the font size. Now, if I say yes, then that's the numbers bars pulling it in directly. But if I use the numbers bars for this, I don't get control over the positioning. And for various reasons, I want control over the positioning of this number. I also want access to this number mathematically, which is why I engage with this calculation using numbers bars calculated values, because now I've got the data in a subgraph that I can start to manipulate. But if you're not going to do clever fancy stuff with it, you can display it using the numbers bars with this setting. So I just disable that. let's have a look at what this tells us. And 30-minute rotations are good because we can start to see the effects. Now let's see if we can find something that's strong. Okay, so here's a up candle. Okay, on my 30-minute chart, how do I get Sierra charts to show the red and green rectangular outline highlighting the maximum delta by price in column 1? Okay, that's very easy. I go into numbers bars. In numbers bars, all the way down here, we've got highlight minimum value in, and I can pick which column. I could say column 1, and you can see now it's only there. I'm doing it in all columns because I want it to stand out. I've got my colors and my line width, but the important thing is on what basis it's doing this calculation. So let's just find where this is, where the input is. What happens in Sierra chart is as they add new inputs, they lose the contextual place to put them and they come at the bottom. So here, highlight maximum minimum value based on ask volume, bid volume difference. They added this quite late. Originally, it would only highlight maximum volume, or it would only highlight, well, sorry, correction. What it would do, depending on which column you told it to highlight, it would use the data in that column. And that's what got me into putting the delta on the left-hand side, because it would, if I didn't have delta on the left, it would be highlighting the maximum volume, which I didn't care about. But here, if the default mode's automatic, and it will guess, and it will typically default to total volume. What I want to look at is highlighting the delta, because that tells me the range where limit orders are in control. So the combination of highlighting maximum minimum value based on whatever metric I'm specifying, together with which columns I want to display this in. I put it in all of them because it's one candlestick, it's just displaying multiple columns of data. Yep, that's how I get that to appear, Stan. So where was I? We were talking about the high pullback and the pullback delta at each end. So what we've got here, the delta as we pulled back from the low was positive 499. You can see that there. The delta as we pulled back from the high was positive 149. So if we see positive delta at both ends, things are really strong. We'd expect to see something positive at the bottom. It's moving up away from the low. That really should be using some positive delta. By comparison, look at this one. Yeah, it did pull back from the bottom on this down bar, but not by much, and there's not much delta going on. Yeah. At the top, we would expect if there was balance to see negative delta, because as we've come off the high, we would expect the reason to be coming off the high to be more selling than buying. But here we've come off the high, net there was still more buying. So overall, this is a strong sign of demand. Yeah, we go up, we continue to go up. Same thing here. Now this candle opened, okay, it's a down candle, but it went up quite a long way before it went down. It went up as we came off the top, quite a lot of negative delta on the way down. Not huge, but still negative. So the way to interpret this, and of course it's forming in real time and changing all the time. Let's turn on the data and start to see it changing in real time. Let's just give this a moment to populate. You can use this as an indication of how things are changing during the bars. We've got this down candle. Okay, we've got price projector at the bottom. But there's positive delta at the bottom of it though. Let's just see what's going on at the top. This should be big negative. Yep, no surprise. Big down candle. Let's just watch this for a moment. Now, this isn't complete because we only restarted the data. We restarted the data before we came off the low. So hopefully we'll break down. I'll come to the orange number in a minute, Dimitri. That's the next data presentation. You're talking about the 508, I presume, yeah? Dimitri, when you say orange number, do you mean this 508? Yeah? Yes, yeah, that's the next step. So here, if I'm in trade, I'm watching this delta changing. You know, we can see here the whole pullback column. It's a bit misleading because we started before we came off this as a new candle. But look, now it's gone negative. If I was tempted to go long as this price rejector, knowing I've got selling pressure at the bottom, I'm not, this isn't going to hold for me. Yeah, I'm going to certainly be avoiding a long until I see this turn positive. Because even though the traded volume pattern at the bottom, exhaustion, consistent absorption, aggression, looks good, I've got selling pressure in what's happening at the bottom of the bar. So I can only feel really confident if I start to see buying pressure, demand, coming off the lows. So it's a little bit misleading because of this. Maybe what I'll do, tell you what, let's, no, we're so near the bottom, I'll wait. We'll wait and see what happens if this breaks the low. A few ticks off, let's just see. And then if it pulls back, well, here we go. So we've broken the low. If we come back, there we go. So we traded down, we came back. Now we've got a clean print. So negative delta on the pullback, and we keep going down. So if I was short, I can feel very comfortable staying short if I know I've got selling pressure since we came off the high and selling pressure since we came off the low. So sure, I'm looking at the end for reasons that this trade may be over, but I'm looking at this as a really coarse guide as well to say selling and selling. Ken is asking, how many levels do I use to construct your delta top and bottom? I don't understand the question, Ken. What do you mean by constructing delta top and bottom? And this is good because we just tripped over into a new 30-minute period as well. So you can see, I've got strong negative delta coming off the top. I would stay short here. I've got selling at the top. We get a bit of buying at the bottom now. Got exhaustion. It's not a great price rejector pattern, but you can see how we've got buying coming in at the bottom now. That's why we've slowed down. I think what Ken might be asking is, I'm not doing any delta. I'm not doing any configuration of delta for a pullback, Ken. The logic is handled by the platform. If we come off the extreme price, we've got the pullback. That's the exact definition of what the pullback is. As we come off the high price, and it can be either we have to make a new high or we touch the existing high, then the pullback starts. It's not something we configure. It's the mechanic of the candle. So if we make this high, then if we make a new high and come off it, let's just see. I think it's going to wiggle around for a bit. We can see here now, positive at the bottom, negative at the top. We're in a bit of balance. These are the right way around, the maximum minimum deltas. If we'd made a new high and come back off, this would have disappeared because we'd have now been pulling back from the top. Now, okay, yeah, exactly, Ken. It's a reversal bar calculation, but we're not creating a new bar. We're looking at the inside of our main candlestick, and this is the reversal that we're seeing. And that's why I call it the auction within the auction. It's probably worth talking a little bit about, the algorithms to create chart bars have all got their, they've all got their little twists. So time, we can understand. Range will result in lots of bars that are really tidy, but they're closing on their extreme high or extreme low. They'll have some overlap, but we're always going to create a new candle when we've gone beyond the size of it. Reversal is interesting. It's point and figure, like a bird in the sky, little baby birds, rotation to location, yada yada yada. It's neat. We can see the ebb and flow, but we still waste horizontal space. What I like to do is have a candlestick that's quite structural, but be able to look inside it. So here we've come off the top. The pullback has started painting from the top. We've forgotten about the bottom now. Okay, I've got unfinished business at the low. I'm expecting I'd be comfortable being short here because I'm expecting this to go lower. We haven't run out of sellers with this unfinished business sign. I've got negative delta at the top. Now I'm not comfortable. There's positive delta. It's turned negative again. So we can really gauge the strength of this auction within the auction at a course level by reading the delta. So these two deltas, the peak within the pullback, and they're stacked on top of each other. That was the area that was being contested. I'd really want to be seeing this delta go positive. Here we go, it's gone positive. And well, we're getting on to the next section now about things like price trajectory. We'll get into that. We're now seeing exhaustion. Now it's turned negative. I'm comfortable to get short because I've got a good volume pattern here. Selling pressure's increased. We're on our way down. Let's see if we get down here and we meet that. So I'm, as well as looking at the patterns in the candlestick, I'm looking at the patterns within the pullback and I'm reading the delta. Looks like we're going to resolve this. One tick more, go on. Someone blow on it, there we go. So we retraded at the unfinished business, we haven't got it. So hopefully that shows, you know, the real-time example, how I'm looking at a combination of the traded volume within my rotation, the traded volume in the rotation, inside the rotation, and assessing the aggressiveness at each end of what's gone on in order to finesse my timing. Now on the dome here, which I've got configured like Jeff's domes in Jigsaw, so I've got the current and I've got the recent on the other side. You can see my current 177 by 48, it's the same as the footprint, I haven't reset it. The 34 by 23, well that is, you know, whatever was recent on the algorithm. So you can see much the same thing by watching this and depending on when you reset it. But you can think about the pullback column as equivalent to every time we come off the high or the low, it's as if I've said reset my recent bid ask as I come off the low. So if I reset it, we've got our 25, okay, it's moving fast, 65 by 12, 65 by 10, okay, so that's when I clicked it, but you get the point. What we're seeing here is analogous to what I'm seeing on the recent. I like to think the platform is hitting reset for me in the dome, and I can read all of these things in a very mechanical way by watching this. Martin's asked, do I consider unfinished business in the pullback bar? Well, remember, I only care about unfinished business really at structural areas, so session high and low, and in the direction of the rotation. So if we were rotating down and we're pulling back up and that's got unfinished business, I don't care. You know, this is very secondary to what I'm reading in the main bar. On the way down, you know, if we rotate up and we come down, I'm going to see the same thing at the bottom anyway. Our big deltas are on top of each other here. This is a battle area. It's interesting reading that. So my peak delta's there in the pullback. I'd be quite comfortable leaning on that if I wanted to go short. You know, there's a little bit of buying pressure here on the pullback, but where are we? 5 minutes past the hour. We still get a sense of where the pressure is. Now in Jigsaw, you know, you can put the deltas for recent and current, which is, that's current and total in Jigsaw language. They appear on the dome, either above or below here. There are some add-on studies for Sierra that will let you do this in the dome, but hopefully you can start seeing now how this is analogous. The only difference is when are we pressing reset. Ken's asking, was I doing any calculations in my previous shared workspace where I displayed 4 text values, some calculation? I don't understand what you're referring to, Ken. What text values was I displaying? Give me some more detail. I might be able to give a clearer answer on that. We will be getting into some calculations on that. So, okay, looks gone negative again. I've got a price rejected pattern at the top of the pullback. It's interesting. Okay, it's positive. I'd be very comfortable, you know, shorting that to lean on that if I was using it as a trigger to go short because of what's happening at the top and the progression of the delta here. So in the request for pullback delta, does this start to bring it to life in terms of its excuse me, in terms of its interpretation at a course level, the mechanic behind where it comes from, and also how we can start to read it using the pullback column? If you get any, it sure does, but needs practice reading it. Absolutely. I think you start at the course level by reading simply the historical pullback above and below, and that's giving you context and big picture of the status or the strength of the rotations at each end. Once that becomes clear as a concept, then you can start to look inside and you start reading this in real time and start reading the auction within the auction. So we know limit orders are winning there, limit orders are winning here. Here's our range, which on a stupid technical analysis chart would be wiggles showing support and resistance, doesn't exist. But now we can read this no differently in real time to reading this, but we're getting a clearer picture than in here, because of course we don't know if this is a completed auction. We can see, and let's look how this is exhausting. On the way up from 619, it's exhausted all the way. We've got similar trailing off. It's exhausting, we've got reducing volume here, but we're not seeing it. We're not seeing it to the same extent. But by looking inside using the pullback candle, we start to see it. So Dimitri's saying he likes this 10 times more than regular zone. You know, it's the same. The difference is what I'm seeing all this stuff here. This is how Jeff reads it. The difference is, if I so wish, I can reset the volumes here. What I've got here is a dome. Yeah, or rather, well, it's not dome, there's no liquidity, but I'm looking at traded volume and I'm saying reset the recent traded volume each time I come off a high or low in a 30-minute time window. Ken is saying PRD, I believe you're saying different values of pullback delta. Okay, so this is the pullback delta. This would be prefixed PB. I'm going to come on to price rejected delta next, Ken, but this is the pullback delta. It's the same as the previous chart book. Okay. It's a different approach to reading the dome. Bill's asking, what was my chart setting for historical pullback, new high low or new touch? On this chart, I think generally I do run it as, I actually tend to run it on new or touch, because to my way of thinking, it's just going to reload it. I didn't do that because I just threw this together this morning. To my way of thinking, as we get back to the extreme, I want to know what's happening now that we've revisited that extreme price. Okay, so what's going on here? Watching back up, I'd be watching to see what happens around this level. But what I will do, you know, I can scalp using this because I'm analogizing it no differently to this. I can scalp using this. What I'm actually doing is I'm thinking in the bigger time frames, what's the implication of delta here? Because that's where the limit orders are in control. I'm thinking the same thing on the session. Look, there's that Sierra chart bug, which we're going to get fixed. So what I'm looking for here, I don't really want to go short unless I can lean on big positive delta, because that tells me where sellers are absorbing. Around this area, we can maybe, where are we? 7 3/4. I'm not seeing any massive green delta. I can feel quite comfortable about that. I can feel quite comfortable about this as well. Positive delta, but it's very short term. I'd be scalping short here. I'd be so protective of this trade. You know, while I might be looking for it to go further down, I'd be mindful of this positive delta. I'd be mindful of this absorption here. So I personally am always looking to lean on where have the limit orders won, and I can see that within each 30-minute rotation, and I can see it in the session delta profile, which I also paint on the dome. So, you know, I can trade this stuff from here, I can trade it from here, the data is all the same. The difference is this chart is hitting reset on these columns for me, where effectively this is being reset every 30 minutes, the current, and the recent is being reset every time I come off the edge. Can I review that chart book page where the data is displayed so I understand everything that's being calculated? I've been watching it for the past few weeks and I find it informative. So Ken, are you talking about the pullback delta and the pullback column? Is that what you want to review? It really helps on questions if we get super specific, because that and what have you, given the time lag on questions, you know, it doesn't make sense to me. So Ken, if I'm going to go through this, can you tell me exactly what you want me to review, please? My chart. I'm not going to review that chart book in this session, Ken, because it's not in this particular computer environment and it's not the scope of this session. But we can review that chart book in another session next week or two for sure. And I guess maybe a walkthrough of how that was put together. Would that be useful? If it is, and if you know we sort of want to reverse engineer that'd be good. Okay, so one of you's requesting is put a live session request in the channel saying, please, can we have a walkthrough of this chart book intent, how it was put together, and then I'll schedule that. Michael Glass, now there's good positives. Absolutely, you've spotted it, Michael. Would I scalp long with the limit buy winners at 4 3/4 and 4? Are you talking about these aggressive prints, Michael? Yeah, I don't care about aggression. It's too visible. Everyone can see it. I'm interested in leaning on the delta. So here, and in dealing with Ken's question, I lost focus as to what was going on. I'm interested in this absorption. I'm interested now, can we get beyond here? I'm more interested in being short here than long. Big positive delta here. Limit orders 1, that rotation. If we go beyond it, if this pattern at the top of exhaustion breaks, it looks like it's going to break. Look how this delta is twitching around, yeah? So we've got less negative delta at the top. Let's just see what plays out here. So I'm watching this value to get a summary of what's happening as we come off the top. Now that's interesting. Where the maximum amount of buying absorption moved down in the pullback column. So that tells me that the passive sellers are starting to lose because there's not as much absorption there. It's popping back up at the same level. Let's see what's going on. You see how that's weakening again? So at the point, there we go, this is likely to break now. We can see how that's weakening. They're having a fight around here. That's this absorption 9 3/4. We get beyond that, we should go further up. Big positive delta at the bottom. They're being beaten back here at 9 3/4. It's still an odd time of the day. We're running up to the open. Now that's interesting that the maximum amount of absorption there, it popped up briefly. You watch the development, even in these candlesticks, and obviously it moves around more earlier in the formation of the candlestick. You start to see where the battle is and where the limit orders are winning. Now here, horizontal chart, lots and lots of chop. Okay, pullback's moving higher. Emilio, it's the day. Well, it's the overnight session. We haven't started the day session yet. So you can see it nudged up by a tick. We've got a bit of absorption there as well. There, but we've found a range up here in the dome. Look at this, which we've got on the volume profile. We start to see where we've got a new battle. Now here in the dome, we see it more clearly. Here's where things are being absorbed a little bit more. This has lost. There's probably a comfortable long here. It'll be confirmed when we see the delta. Let's see if we pop up and we break it. Joseph, why have the table visible at the bottom? Yeah, it's very secondary information. There we go. We broke through it. I will do this really just if I want to look back over time and just get a sense of the bar deltas or the cumulative delta on the day. I'm not looking at it that accurate, that actively, but it's there just so I've got some quick summary data. Now you can see we've got positive delta at the top. We stay long. Here's where the limits one in the pullback, which was where that was sitting. This will continue up. So I hope that gives a sense of how we read and we can use the pullback delta. It's no different to doing it in the dome. It's just different presentation. Okay, they're resisting a little bit, but this is weak. It's interesting to have both side to side. Notice I haven't once reset this here because I can read everything in here from here. but it, I don't know, you get a bit more proximity. If you're doing it in the dome, maybe you can start to get a sense of the limits as well. This is maybe a bit clearer. That was the absorption area for that pop-up. It'll be interesting where we go down to. Anyhow, that's pullback delta, which is the second thing I wanted to cover. Now, I've done a Sierra chart focus on this session because NinjaTrader, there's various ways of getting to the pullback data. In MZPAC, they call it COT, which is ridiculous, commitment of traders. And it's even more ridiculous when NOFT referred to commitment of traders. They use that phrase, the POC. And GOMI also uses COT to describe pullback delta. This is the only definition of COT that matters. It's the macro report delivered weekly. So I take great exception to pullback delta being called COT. But just be aware, I think native NinjaTrader volumetric bars don't do it. MZPAC does, GOMI does. I question maybe how much understanding either of them has about the concept though, because when you look at their examples, the examples they give on how to trade it conflict with each other. So the mechanic is there in various platforms. Certainly in MZPAC you can get it. In GOMI you can get it, but they give different guidance on the interpretation. So let's start to put this together. And this is really red pill, blue pill time. Now, as you know, one of the patterns which I like, I'm going to turn off the data so this stops moving. One of the patterns we look at a lot is what I refer to as the price rejector. Let's see if we can find one on this chart. Yeah, Ken, it is surprising that they use that term. It's nonsensical. And then, NOFT using it for POC, it shows the amount of nonsense which there is. I'm wanting to find a price rejector at the top if I can. And of course, I've got lots of price rejectors at the bottom. There we go, there's one. Okay. So we know this pattern of exhaustion, 328, 147, 102, 2. Can we request a live session watching you, Stalker? Oh yeah, at some point, happy to do that. The challenge, of course, around live sessions is always that who knows what will happen in the market, but what we could look to do is schedule something maybe is I do something about reading initial balance breakout trade. We'll do an hour looking for the breakout and then looking to see if it turns into an IB range trade. So we could look to schedule that over the next week or two for sure. Okay, back to price rejector. One of my favorite patterns because it's giving me everything. I've got exhaustion. I'm running out of aggressive buying as I get to the top. It's a completed auction. So just to be clear, 328, 147 is less, 102 is less. Less buying at higher prices. Sounds logical, doesn't it? I've got aggression on the way back down. And with really strict parameters, all of the aggressive buying is being absorbed because I've got positive delta. So if I'm reading these top 4 price levels, I can't really ask for anything more. I'm running out of buys at high prices. All of the buying is being matched by passive sellers, and there's aggressive selling on the way back down. And other than somebody coming out saying this bar is going to close lower and it's going to close at this price, I can't really ask for much more of a sign at this top telling me this is a really well-defined top and here's why. So I call that the price rejector. Now this 241, and that's for the benefit of that'll be Ken. What I'm doing here, if we add up these deltas, 147 plus 64 plus 28 plus 2, let's do the mental arithmetic, that's 30, 94 plus 147, yeah, I believe that's 241. God, in prop firm I had to do that. 94, that was terrible. 94 plus 147, 241, thank you. So my mental arithmetic used to be super quick on this stuff. All I care about here now is I'd look at that quickly, that's 200-ish, 230-ish, yeah, it's about right. This 241 is the number of contracts which were absorbed within this area. The way I'm doing this is I'm using an emoji indicator. They're really quite good, I recommend them. So in Price Projector Pro, which is how this is being drawn, Price Projector Pro has been set up to look for exhaustion and consistent absorption. So I've got the exhaustion, I've got the consistent absorption, my opposing aggressions, 300%, and all I'm doing is just to bookmark things I might otherwise miss. You know, I can read this manually from the raw data, but actually, let's paint a big red box. But the value for me here is in the subgraphs, some of the data that's being published by the indicator is the absorbed buyer volume and the absorbed seller volume. So, Dimitri, is there a reason I'm calculating it's based on price and not order flow? What do you mean, Dimitri? Everything's being calculated based on volume. Oh, right, you're talking, no, that's visualization. I'm not doing any dynamic mode visualization here. So that's the default setting. All I'm doing is a fixed projection. Okay, so to get back on topic, the absorbed buyer volume is being projected as a value on high. So I have the indicator telling me how many contracts are offside, trapped, wrong, potentially, and it's 241. So why am I doing this? Well, let's look at the mechanic. Here's an example here. At the low, in this example, 470 contracts, so minus 370 minus 107 is minus 477, plus 7, positive 7, net 470 contracts were sold in this area. Hopefully that makes sense. Now, here I'm taking the chart and I've turned it into a 4-range chart because I want to actually look inside what went on within this candlestick. On this 4-range chart at the low, you can see my 107 by 0 print. That's the same as what's on the bottom. My 554 by 621 is different because of the arbitrary incorrect horizontal slicing. But 554 plus 139 is 693. 621 plus 79 is 700. So you can see by crunching these together, I'm getting the same volume prints. So if I add up through these 3 horizontal price levels, the delta, I get to the same amount. Negative 727 plus 357 minus 60 plus 67 minus 107 is net 470 contracts negative. Same thing that the indicator's putting out here, even though I've split it there. So let's just remember that figure to start with. Now, what gets interesting is the mechanic as we move out of this area. We know in this area there are 470 contracts which may well be offside. What happens in the delta from this point on? So I've got time projecting out here. We come down, we open here, we open here. It's only when I trade above this level that we start to get a picture of what's going on. On the way down, I'm forming these 470 contracts being trapped. As I go back up, I can start to get a picture of what's happening after that. So let's read and add the deltas together as we move away from this area. First price level away from this area is here, 111 contracts, positive. Next price level, 124 contracts, positive. Next price level 18, positive, 157, 78, etc. You get the idea. I'm now starting to track how many contracts are trading outside of this area which I've analyzed at the bottom. So we know there are 470 offside here. If I start to add up these deltas, 111 plus 124 plus 18 plus 157 plus 78, at point B, this 207 by 285 print, 78, 488 contracts traded long aggressively. We could assume all 470 that were here have now liquidated. Here's the cumulative delta behind that sum. 111 plus 124 is 235. This plus this, at this price level, 235 contracts have been bought long. Next one up, add 18 to it, 253. Now, we could think all 470 at the point we've got here have puked. What's interesting is we look at the rotations. As we've gone up, this candle, if I look at the delta, is there are 312 contracts more that have traded. How am I getting to that number? At the 78, I'm at 488. I'm 18 contracts above what's there. 18 plus 217 plus 77 is 312. Now, at the point I've got beyond where everyone has potentially puked, there's 312 more contracts bought, and I can start to do the same thing. That is really getting deep into let's read things tick by tick. But what's interesting about this is here we can think potentially everyone puked. We went up, we came back down. Look at the behavior when we came back down. Now, the maximum amount of selling absorption occurred at the point where potentially everyone had puked. Maybe coincidence, maybe not. This is where it's interesting to look at these charts, split them up and start to see the behavior. This rotation down, it hit the point 18. Now, if we look at the cumulative delta, that's 253. That was about 50% of what had puked. Now, I find this quite interesting analysis to use as a trigger. If I've got a price rejected pattern, or maybe big absorption, maybe I'd say 1,000 contracts have been absorbed. I don't want to rush getting in just because I see it. Anything could develop. But it's interesting to use the pullback delta to start to track of the amount of delta I can see that is potentially offside, how much is going the other way? And I can start to get a view if people are indeed on the wrong side, and as they puke, do I join in? What we don't know though is of these 470 contracts within this pattern here, were they sellers opening new short positions? Was this people aggressively hitting the bid to go short? We don't know. Were they buyers closing losing long positions manually, their stops? Potentially, there was somebody who bought up here, their stop hit here, and their stop got triggered. So if their stop got triggered, it would turn into a market order. We'd see it print here as an aggressive selling trade, but as they're stopped out and their position's closed, they've got nothing to puke. And I can't imagine they'd be buying back. And we don't know, was it a new short or a closing losing long? It could also be a closing winning long. Somebody could have bought down here at another point in time, it's traded up, it's come back down, they happen to have their protective stop here. Or it could be somebody spreading, could be a calendar spread, could be intermarket spread. So we don't know for sure that there are 470 contracts which are wrong, because we've got these four scenarios. Is it likely all 470 were aggressive sellers hitting the bid at the low of this candle? There can be losing buyers who have closed, there can be winning buyers who have closed, or it could be anything else going on. So there's a degree of discretion, fluidity to be taken in interpreting how much of this 470 do I need to see eroded before I decide to get in. Let's go back and turn the data on, and we'll look at this actually on some charts, and hopefully we get one in real time. I need to ask, what about the sellers? What about the sellers on the levels above the price rejector? They can be in the trade and step out. I'm not following you, Anita, because in this example, we're talking about trapped sellers in this area. So you're saying somebody could have sold up here. Are trapped sellers only on these levels? Well, this is where we're getting a clear picture of a potential turnaround because we're running out of sellers, we've got the absorption. Well, there are sellers and buyers at every level. Yeah, sure, there can be sellers here who are wrong, but we're qualifying who is really wrong based on the combination of exhaustion, absorption, and aggression. Does that make sense? And a seller, well, a seller above is only trapped when price goes above. So these sellers are wrong as soon as we're one tick above. The seller up here isn't wrong. They're only wrong when we get back up and beyond them. So we only care about the people who have sold at a price level below where we're trading now, which is why as we analyze this, we're looking at what happens to this volume as we get above it. So sure, here, as we are, yeah, we absolutely, we only care about the ones that fuel the upside. Every seller, when you're a seller, you become a buyer. Here's a photo of my brothers. So they are selling as they run. Exactly, we care about people puking. Now, we can't know for certain if these were aggressive sellers or whether these are new open positions that are wrong. These could be closing. We're not sure, but it gives us a sense. Let's have a look at this on the chart and see if we can get anything in real time. In an ideal world, I'd be getting a beautiful price reject pattern at the low and we'd be able to read it. Now we're in the open, it's going to move really quick, so let's find out. It might take a while to form one. Let's have a look. Let's see if we've got any historically where we can, there's one. Okay, here, and actually small bug, this 67 is wrong because it's not adding the top level. That's the glitch in emoji will be fixed. We can see here, logically, now on the platform, as we traded down here, I can see my 67. As we go above, as we pull back from the low, I know my pullback delta. So as well as assessing is this positive, I can look at how much delta has occurred since I've come up from the bottom and how does that compare to the delta that's offside. And for me, typically, I'll start paying attention where if I know I've got people who are potentially offside, once my pullback delta is 50% or more, I start getting interested to watch it really closely as a trigger. And why 50%? Because I figure 50% chance of them being new positions that were opened and wrong, 50% chance of them being closed. No logic to it other than that, other than I know they're not all right. Here we go. We got price rejector at the bottom. And I'm not seeing the delta because that symbol's come in. I'm going to have to hide something here. Whoops. Let's see if this comes in again. Maybe around the 0 risk prints it will come in. Or we can even think of this another way. Let's think about this, the very lowest delta print, minus 82. How much do we need to see here for those 82 contracts to know they're wrong? This is the logic. And whether we are tracking 714 was the peak absorption. There we go. The orange number came in really quickly. And during the open, it can be very hard to see. But the rationale is we know here we've got what, 300, 350 that have been aggressively sold. How much of that do we need to see bought to be thinking about going long? And we can apply that at both ends. We're going to continue down. It's unfinished business. Let's see where we get to and see if we get a price rejection at the bottom. And there we go. So 400 odd contracts, 600 odd contracts have been absorbed. Here's the positive delta. I want to see the positive delta get to 300, 400 before I even consider going long. You can see that and it's disappeared. So that would have been a poor long. Unless you wanted to scout that for a tick or two, there wouldn't have been a structural kind of reason to get long. But there we go, 200 odd, 150 odd, but we've still got negative delta until this pullback. Okay, and it's gone already. So you can start to see how I let the platform show me what's potentially offside, what's the aggression opposing it, and I will use that as a guide to consider, am I going to act upon the pattern that I'm seeing in the traded volume to get in? Does that make sense as a mechanic? Anybody? Yes, Anita says yes. And Dimitri, does that make sense? Yes. Okay, great. So, Chris, oh, thank you, Lambert. Thank you. Crystal clear. Excellent. I try to be as clear as I can. So, what we have done quite quickly, we've gone just over an hour. We've looked at delta high and low. The recap, it's a candlestick. You know how to read candlesticks on price. We can read candlesticks on delta. The story on delta in a candlestick is going to tell you what happened. Compare that to the story on price. Does it make sense? If so, great. If not, the answer as to what to do will be clear. It's an anomaly. We've gone through pullback at quite some length, both the mechanic and also the value of seeing it as a pullback column. And of course, we can see delta as the coarse view of the net of what's happened at each end. And it's analogous to our recent and current columns in the dome. And then how you can equate pullback delta to considerations of the delta that is potentially offside. So here, even without a pullback pattern, conventionally these would be trapped traders, 49 are trapped. Actually, these, 400 or so are wrong. As soon as we're above them, they're wrong. How much delta do we need to see here to think that they're puking, also incite us to get in? So that is our very quick recap. Dimitri saying the yellow numbers on the pullback column are the same as orange on the regular bar. No, the yellow numbers are the market depth. Here, this is 203 lots in the dome at 93. I'm using market depth historical graph like bookmap, but without cluttering the screen, just to draw my attention. 200 is too low, actually. I just want a quick visual on the chart. So they're up at 15, 255. So I'm just doing some filtering using market depth historical to identify things. So that is whistle stop tour of some medium advanced, really advanced concepts in Delta as a live recap of the Delta deep dive. If you've got any questions, now's the time to post them. Thank you for your thank yous. Much appreciated, Stan. Much appreciated, Joseph. So there were a couple of requests on live sessions. Please post this in the live session requests. I'll work with Jeff to schedule these. Certainly, I'm very happy to do a sort of, here's a forensic of a chart book and how I put it together and why. I change my chart books up really frequently, every 1 to 2 weeks, because it's never finished. I want them as simple as possible. But we can go through the structural one for sure. Also happy to do some, here's Lee reading the market live. It'll be a different approach to Jeff. I'm happy to do a bit of scalping. I'm also happy to give my thoughts around, have we got a setup in place? And if so, how am I going to enter and how am I going to manage the trade? Michael, how long before this can be posted to Slack? It's up there already, you impatient man. No, yesterday's FOMC is going up this afternoon, UK time. This will need a little bit of time to render. This should be up in the library, certainly before close of play tomorrow. It's just a function of Zoom and Vimeo, but it'll be up there. Ken, did I share this in Slack for us to watch? It doesn't exist yet. We're still doing it. When I've finished, this is like Schrodinger's cat. The recording will exist when we finish and when it processes, but it will be posted in the Slack for sure. Michael, do I need a post request for the live set? Yeah, please, just so it's an aid memoir. Chart book, really? Okay, I'll post this. There is nothing in this chart book that hasn't been posted before. This is elements of the structural one. This is the TRG domes. It's got some emoji things, but I'll repost it as a simple full HD chart book. Stevens asked, can I go over how to change the delta showing up at the top or bottom of my bar? On my chart, there's a red background on the bottom and green. Yeah, the reason for that, Stephen, is I'm using study subgraph above below bar as text to pull in the high pullback, low pullback from numbers bars calculated values. I'm doing that for a couple of reasons. Firstly, if I put the information there using numbers bars by selecting the input, show historical pullback, ask volume, bid volume difference, yes. It will put it in, and it's putting them in here. 779 is the same. Yeah. So the reason I'm doing it here, pulling it into this subgraph, is firstly, I can control where it goes. The reason I want to control where it goes, and I've offset it by 4 ticks, is when I'm using the price projector, so that's the emoji study, not a standard Sierra chart indicator, price projector, I've told the price projector delta to appear at the high or the low. That's the same place where numbers bars will paint the pullback deltas. They overwrite each other, simply I can't see it. But the other reason I pull it in from a subgraph, and let's just turn it off on the numbers bars. The other reason I pull it in as a subgraph, let's just, where's it gone? You'd think I'd remember on the amount of times I do it. Highlight historical, here we go. So if I turn that to no, the other thing I do though, and let's find an example. So here's one of the price projector. So you can see that would have been overwritten. Let's make this super clear. If I go into numbers bars, if I use the native numbers bars presentation of that data, somebody remember the input value. So the orange number is what I've pulled in from, is the subgraph I'm displaying price projector. Numbers bars overwrites it. So that's the first trivial reason why I'm not using the numbers bars version of doing it. And this is what controls the color on the native numbers bars version. But the other thing is I've now got both of these as data. The data for this 113 has come from the numbers bars calculated table. If I go to my chart values window here, and let's, I've got to just make that the current bar in order for the value to appear. There we go. So that's the current bar. Now what gets really interesting is I have got this -113 available to me as data in numbers bars calculated values. Okay, it's not there because I'm looking in the wrong window, but the -113 is available. I've been able to pull this into subgraph. Within price projector, I've also able to access the data absorbed by a volume 124. Now I can start to do some really neat stuff, either by calculating what the difference is, or maybe setting up an alert for when this is 50% of this. So if half the people have puked, give me an alert, or change the bar color background, or go short. So I want to access these things as data in order to do cool stuff with it. If I use the numbers bars presentation of the -113, I've got no access to the data. I can only get that data through the numbers bars calculated values. So, Stephen, that's why I'm doing it using the numbers bars calculated values and then pulling it in as a text value. Firstly, to control the position, so I don't get a conflict with my emoji indicator. Secondly, so I've got data access to both these values, and I can start to do really clever stuff based on comparing these values. Dimitri, 2020 equities chart footprint configured quite differently. Is this a later version? I find this easier to read. Yeah, I change my chart books all the time. I was doing some work yesterday based around setting up like half a dozen domes combined with one chart. I'll post this into the channel. It's best, you know, understand how these things have been put together and then start to build your own. But yeah, I'm happy to post this so people have got a starting point. What I can't do is go, well, if it doesn't work for you in this way, here's what you need to do. Ultimately, you've got to own your own chart books and know how you've built them up from scratch. You can get the principles. Yeah, Anita, I'll post this exactly as it is after the workshop. Lambrecht, are the parameters to identify price rejector? Okay, Lambrecht, price rejector is an emoji indicator. So it is not a standard Sierra chart indication. The pattern is something that I came up, well, Mike Valtos, and well, Noft, then Mike, and then came up with it 5-6 years ago. I created some more logic behind it. You can build this in an alert condition in Sierra chart if you that way inclined. But the values for emoji is not so much identifying it, it's visualizing it, it's tracking the visualization over time. And for me, being able to extract data like the 124 delta and do other things with it. The parameters are absolutely not fixed, but the key points are we must have exhaustion, we must have a finished auction, we could have aggression in the opposite direction, but how much? 300%, 400%, 987%, like a bird in the sky? I mean, it's whatever number you put in is wrong on aggression. Imbalances are wrong. Yeah, no, all we're looking at is this is significantly more than this. And I like to see consistent absorption, so absorption at every price that's exhausted, although I will sometimes consider the aggregate absorption. But as an indicator, it's an add-on. It's not a standard Sierra chart feature. It's an emoji indicator, Lambrecht. To get Dimitri, Anita, Michael, do I see any value looking at this pullback delta on a 5-minute versus? Yeah, absolutely. So because I can read what's going on here, and I use this for my context. If you are not so comfortable yet at reading the dome, sure, run this on 5 minutes or 15 minutes or 3 minutes. All the same principles apply because we're reading the volume. But be aware, while Jeff is absolutely right, we are seeing what's happening in the now on super quick charts. Remember that if we are, let's go back to the pullback explanation, all charts are wrong. Now, as we are starting to splice the volume up here, or actually good indication is on the, move this out of the way. Good indication is my example of this pullback delta. The bottom of this 30-minute chart gave us our price rejector pattern with aggregate absorption. So the total absorption there, that was negative delta. If I'd had this on consistent, I wouldn't have got the pattern. I'd have taken some discretion reading that manually. But here on this 4 range chart, I don't have the pattern. 210, 554, 107. I don't have reducing volume. So Michael, whenever you carve up volume with these arbitrary horizontal divisions, you're going to see patterns in the footprint in different places because all of these horizontal divisions are arbitrary. The reason I look at the 30-minute footprint is because my setups are based upon market structure and concepts of market profile. So I might, if we're churning around in the middle and I really want to see what's happening, imagine we had 3 30 minutes and we've just got range going on in here. Maybe I'll zoom in to look for some of the behavior inside it. And that's where 5-minute or 5 range or 8-tick reversal, doesn't matter, they're all wrong. Could be a way of looking at it. But I only care about these longer rotations because they form the structure and the context of what I'm interested in trading. To go in deeper, I'm looking at the metrics that the delta and the volume tell me, and ultimately I'm then looking at the dome and leaning on the absorption in order to fine-tune my entry. Anita, maybe it's better to print the price rejector without the aggression. Yeah, I think that's valid. You could certainly, set the imbalance percentage to 0, and you can just take a view. Is it twice as big, 3 times as big, 8 times as big? It doesn't matter. Point is, we want a sense of aggression, or we might be aggressive, and we're not looking for aggression. We'll just trade exhaustion and we'll scalp it. So, you know, certainly that's something I've done in the past where we're just looking for the combination of exhaustion and absorption, which isn't a bad combination. Okay, the imbalance hasn't disappeared. The imbalance is coming from the footprint, but I'm going to get more of these blocks because I don't care about the diagonal comparison. What's Amy saying? Slow process for me. No blinking reading the delta chart same time frame. I've got reading price action. Don't. Yeah, and this becomes a blink once you really embed the patterns. And that's why the people I've coached privately, Anita, Michael, people like that, you know, we don't even use the indicators. Only when you start to see this, oh look, there's a price rejector without aggression, 84 versus 96. Only when you can see this in raw numbers is it right to then apply the indicator, because the indicator is saving you time, it's making your life easier. Reading what's happening here, you know, it's different ways. Some people, let's clear the current, let's clear the recent. All of our blinks in the dome are different. I was reading this in the Wyckoff, but you know, lots of people looking at imbalances and aggression. I'm looking at the deltas. I'm looking at what can I lean on here? How's my mini footprint here? Well, I've got exhaustion. I've got a completed auction. I've got absorption here. Looks like that's absorbing. Would I be happy to go long there? I probably would, because that's protecting me. I'm skeptical of that on the way out. Looking at what I can lean on. Yeah, that's interesting. I've got big volume there, protected by negative delta. So, you know, would I throw something in there? Yeah, of course I would, because there's some soundness to it. And that's, but I'm always doing that if I'm trading the dome, still in the context of my bigger picture that's here. Ken, when looking at key price levels where you know others are going to be trading, do I look for larger, smaller, or whatever numbers to account for the amount of retail traders flooding those levels? Yes, do I look at that level? No, I look at my inflection points. So midpoint, open 5, high and low, initial balance, high and low, the open. I'll be aware of round numbers, but I'm not actively targeting them. I won't be surprised if I see action going on at round numbers and century numbers, but I'm not going to actively hunt them out as inflection points. If they coincide with a midpoint or an inflection point, then it just adds weight to my business case. Dimitri, how do we interpret the situation when we have the positive imbalance on the R side instead of conventional negative imbalance on the bid side? Yeah, good question, Dimitri. I don't then regard it as a stable price rejector. If I see anything that makes the pattern look odd, so here we go, we've got this one because we tuned the imbalance out to 0. This imbalance here would immediately invalidate this for me. So 33.58, that's what, 125, 130%. If that had been flagged, an imbalance on the wrong side or even a double imbalance on the right side invalidates it for me. I've seen them be unreliable too many times. Lambrecht, can the emoji price rejector be fine-tuned with parameters? Hugely, Lambrecht. With so many that every day I'm bombarded with questions from users going, but what settings should I use? If you go on the emoji website, you can see the full reference guide for the indicator that explains all of the parameters that you can fine-tune. Amy, yep, I see that, and it's how I'm managing scalp pretty high rate of success, but as soon as I start looking at longer time frames, I slow down. Okay. Anita likes inflection points on market profile. Yeah, see Bubba. Dimitri makes sense. Lambrecht is laughing at my good humor. Fantastic. Good. Well, I think we've got through the questions. Last call for any questions on this material. Going once, going twice. No, thank you, Dimitri. So, recording of this will go up in the next day or so. I'll post the chart book up a little bit later today, and I'll take note of the live session requests for some live market watching over the next couple of weeks, and also a forensic autopsy of any requested chart books. So thanks everybody, have a good trading day. Thanks for coming, bye for now.